Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, guys. Let's take a look again in the gold market. The gold market forms very interesting step right now. In general market, very interesting in recent few months. Actually, I do not understand this low interest from our farmers to gold market, because here we have even better trading steps than on the forex market. So let's continue with our trading plan. So on weekend we said that market in general keeps very well the bullish sentiment in the market. It forms the bullish patterns that suggest the upward continuation. But still, the major concern that we have here is the depth of the retracement. So it could be either one leg retracement, V-shaped retracement, as I said. So for example, market could show the retracement here and starting upward action, or it could be deeper AB equals CD retracement. So both retracement will not break the overall bullish tendency context, but it makes us to act differently, depending on what we will have. Currently, the chances more stands in favor of the upward continuation, because take a look, we have grabber on Friday, and take a look yesterday. It was not a bullish grabber has been formed. Market was open here, shows downward action, but close above the MACD predictor line again, and has become the new bullish grabber. And both grabbers suggest the taking out of this top. Both of them suggest V-shaped retracement, so retracement down and upward continuation. But still, we will follow our trading plan that includes both scenarios, as for a V-shaped upward continuation as for a BCD retracement down. The target on the daily chart, as you know, stands. It's XOP in 1267. It's major XOP with this A, B, C bottom. OP has been hit here, retracement. XOP stands here. Market now is challenging and struggling with the confluence resistance 1238, 1252, and coming to the upper border of this confluence, because it already has been tested with the spiked up mostly through the whole width of the confluence. Now the second attempt, market freely behaves and feels really comfortable inside of it, so it fluctuates inside of the confluence freely. So next target will be here that we are watching for. It also will be daily overbought. But again, since tomorrow we will get the Fed statement on the perspective of the United States economy, this is risk factor, so this could change everything. But currently, guys, everything stands very nice and market behaves really perfect. So on the 4-hour time frame chart, what we have, that was our first entry. If you remember, we have this minor A, B, C top pattern. XLP has been hit. This was our first entry opportunity on the last week, and you can see it's worked very nice. Market right now shows a very good rally, and it lets you to move your stops to break even freely. It's more than $10 per contract on upward action. But still, I would say that maybe it's not a real big chances for that, but still they exist, that maybe market could still show the deeper ABCD retracement. Just to prepare to it, you could multiple way to act. So you could, for example, first of all, we need to move stops to the break-even. That's obvious. Second, here you could decide to close your half of your position and keep the rest. You could keep the whole position valid, or you could, for example, try to close the position here, trying to catch a retracement, and re-enter a bit later, because in the current circumstance, you can see that this upward action is a bit not very typical for hand shoulders, because when the market forms the hand shoulders, the right arm is the area where bears take the control of the market. But this is not this is not the way how it usually happens. You can see this it's vice versa. The bulls shows the really strong action here. That comes mostly from the recent behavior of the stock market. So we'll see. It was really very big collapse on the stock market that supports the gold prices. This in turn could mean that maybe we are getting not the hand shoulders, but we could get the butterfly. So this here minor retracement could follow, and market could reestablish upward action. So that's why how to behave in the current situation, it depends upon you. It depends on your personality. So if you're trader that you do not like to re-enter, you do not like to catching these moments of the entry in the position, you're more comfortable to hold position with a break-even stop, well, do this. Just move your stop to break-even and watch what will happen. So if you feel comfortable with the often closing and taking the position, well, you could act differently. But if you will get the butterfly, guys, take a look. Actually, we have here the same target. We have the hand shoulders with the ABC bottom, XOP stand at 1262. So here was the OP target, XOP, sorry, 1265. So mostly the same destination point as on the daily chart. And potentially, if you will calculate the extension, you will see that 1618 stands 1262. Very close, and actually we could get the butterfly. So minor retracement will happen, and market could continue to move higher. So why this retracement actually could happen? So take a look at the hourly chart. On the hourly chart, market has completed A, B, C bottom, XOP target. That is also weekly pivot resistance one, and normal pullback right now is falling. The most probable targets that the market would hit on the downside is 1242 FIB support, 30% support. It could be reached somewhere in this area. Its normal retracement could take place. Also take a look at here, we have perfect double repo sell pattern. Scalp short position could be taken. That's only for scalp traders. In the last moment, so take a look, that was our second attempt for taking the position. And as we said that if you have missed the taking position at the XOP target, don't regret that. You could get trying to take the position on retracement back inside an engulfing pattern, because very often, as a rule, retracement back in the body of the engulfing happens before we have the continuation. And you can see the second entry attempt also was perfect. So that being said, currently we do not see any reasons yet to cancel our bullish view on the gold market, but still some retracement could take place. We still work with our a bit maybe complicated scenario because it suggests both ways of the action. So we suggest we keep in mind as this possible deeper retracement as the immediate upward continuation, and we have the trading plan for both of them. Since the two steps of our trading plan is already completed, because we take long position, we move our stops to the break even. Now we just could wait what will happen. But currently, guys, with having the bullish grabbers on the table on the daily chart, it's more probable that we get some minor pullback here and upward continuation. Currently, it seems more probable scenario, but again, Fed could adjust this trading scenario and situation could change. This is the reason why we're every time call for taking the position at strong levels, as we did here, and move the stops to the break even as soon as possible. Here, as you can see, we could do it very simple, since market already has passed more than $10 per contract now in direction. So let's see what we will get within the two sessions, because currently by the Fed impact I do not exclude chances that gold really could hit the target in 1262 to 1265.